Welcome. In this video, is Xcn coin ready to go up? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand. On careful technical analysis of the chart, one of the structural elements that immediately catches the eye is a relatively small but effective downtrend structure that has formed in the past. Such downtrends indicate that the price has been moving downwards for a certain period of time, that supply is outweighing demand, and that a temporary negative momentum is prevailing in the market. However, what is noteworthy and very important for traders is that this downtrend structure is no longer valid, and the price breaks this trend line to the upside and starts to build a new technical structure. This breakout is considered an important turn signal in technical analysis and is often considered the start of a new bullish move. Trend lines are invaluable reference points for traders. They reflect market psychology and price behavior, generating signals for possible breakouts or retests, as well as changes in direction. Breaks of downtrends, especially on smaller time frames, are particularly valuable as they can signal the market's upside intentions earlier. In the current chart, a similar scenario played out, and the price successfully broke this small downtrend to the upside. The developments following this breakout are also very promising. The price retraced immediately after this breakout and touched the trend line again, a classic retest move. A retest is a very healthy structure in technical analysis, as it allows the market to test the broken level and try to turn it into a support zone. If it holds above this zone, this will strengthen the bullish movement and boost investor confidence. If the price holds in this zone after the retest, it means that this trend line, which previously worked as resistance, is now functioning as support. This proves that a technical rule known as the support-resistance reversal has come into play. With this transformation, the market has now abandoned its bearish structure and made it clear that it has adopted an upward trend. The limited selling pressure during the retest process indicates that buyers are concentrated at the relevant levels, which is one of the most important factors that increase the upside potential of the price. From this point on, the possibility of the price making upward attacks is technically quite strong. This is because such small trend breakouts and subsequent successful retests are often considered as leading signals of big moves. In particular, such microstructures can be the starting points of large patterns that form over larger timeframes. Therefore, the current developments paint a very positive and encouraging picture for both the short-term and medium-term outlook. In addition, this technical structure also serves as an important signal for investors to gain confidence. This is because many investors consider the price breaking and then retesting a downtrend as an indication of the market's determination to change direction. Such patterns have a positive effect on investor psychology and set the stage for new buying pressure on the market. However, the volume increase in the area where this breakout and retest occurred also indicates that the buy side has started to actively enter the market and the necessary energy has been gathered to move the price up. Volume-backed breakouts are always considered more reliable, because volumeless breakouts are usually fakeouts, while volume-supported breakouts point to more permanent and effective trend reversals. But we can't decide the analysis only with trends. Let's look at other metrics. Keep watching. Based on extensive technical analysis of the chart, and in particular the Elliott wave theory, it is noteworthy that price action is currently forming a second wave pattern. This is a very critical and exciting phase because according to Elliott wave principles, the second wave is the correction wave that follows the uptrend that started in the first wave, and after this correction, the market is usually expected to transition to the third wave, which is a much stronger and long-lasting uptrend. Therefore, the current technical outlook provides an extremely important structure that suggests that we are on the verge of great potential and that the positive momentum in the market could gain momentum. Elliott wave theory is a method of analysis that helps us understand market cycles and classifies price movements into 5 main bullish waves, followed by 3 correction waves. According to this theory, the first wave is usually a recognition phase, meaning that the market begins to rebound from a bottom, but many investors do not yet recognize the rise. The rally at this stage is often limited. The second wave that follows is a correction and prices retreat as market participants take profit realizations or consider the initial rise to be a temporary move. However, this retracement is usually not too deep and is carefully placed, especially at the Fibonacci levels. This is exactly where we are now. The second wave is undergoing a correction, which may be setting the stage for the third wave to come. The second wave, although it may look bearish, is actually a very strategic period of gathering energy for the next big move, where the technically weaker hands in the market are eliminated and the stronger traders consolidate their positions. This wave of correction is usually limited to pullbacks down to the Fibonacci 0,618 levels, where the direction turns back upwards as buyers step in. If the price stabilizes at these levels and starts rising again, then a much harder and sharper bullish wave is triggered with the beginning of the third wave. The third wave is known as the strongest and longest wave in Elliott wave theory, representing a period of increased investor confidence, an intensification of positive news, and a significant increase in volumes. From a technical analysis perspective, with the start of the third wave, the price is expected to reach a minimum Fibonacci extension level of 1,618 as the first target. This level is one of the most commonly used points in technical analysis where prices move with strong momentum. However, what is noteworthy and even more exciting here is the possibility that the price could not only reach the 1,618 level, but also head towards the 2,272 Fibonacci extension level. This means that the current price structure suggests not only a limited rise, but also a rally with huge potential. The third wave, reaching the 1,618 and 2,272 Fibonacci extension targets, is a very likely scenario that has been observed in the past in many different assets. Since these levels are closely monitored by technical traders and institutional investors, there are usually significant price movements at these points. This makes the third wave not just an ordinary uptrend, but a harbinger of a major market transformation. However, a healthy completion of the current second wave structure will lay a more solid foundation for the third wave. If the price holds at certain support levels during this correction and then breaks to the upside, it will be one of the strongest technical signals to trigger the third wave. An uptrend, especially with an increase in volume, will further strengthen this scenario. There is a technical structure on the RSI indicator that is noteworthy and extremely favorable for traders: the uptrend. This uptrend indicates that the RSI line has been moving upwards for some time, making successively higher lows. In technical analysis, such a pattern is considered a strong sign that momentum is strengthening to the upside. Since the RSI is an oscillator that fluctuates between overbought and oversold zones, the continuation of this uptrend could be a critical element supporting an upward pressure on price action. In particular, the fact that the RSI recontacted the support line it had previously tested and bounced up suggests that this trend is still valid and that the buying momentum has not weakened. The fact that the RSI moves with the price along this trend line indicates that the positive alignment continues, while increasing the potential for the price to generate new upward reactions accompanied by this technical structure. The protection of this rising channel formed by the RSI gives investors confidence that the trend will continue. In particular, the fact that the RSI remains above the 50 level and reacts upwards without approaching the trend line shows that buyer interest in the market continues and momentum remains strong. This paints an optimistic picture that the current uptrend is healthy and sustainable. In addition, this uptrend in the RSI is considered an important technical indicator that supports the price's potential to test higher levels in the coming periods. In technical terms, it is critical that the uptrend in the RSI is not broken, because as long as this line is not broken, the upward journey of the price will continue to be supported. RSI should not break this trend. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.